Hello everyone and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, we are looking at Intel, ticker Intel, which has been on an absolutely monumental run, closing yesterday up nearly 9% and soaring over 37% since September 17th. There is a whirlwind of news driving this rally, and we're going to unpack all of it. Then, we'll dive deep into the daily, hourly, and 15-minute charts to see what the technicals are telling us and identify the key levels you need to be watching. First, let's talk about the headlines, because the sentiment around Intel has shifted dramatically. The primary driver appears to be a massive vote of confidence from major industry players and the government. We've seen news of investments from the US government, SoftBank, and even a staggering $5 billion investment from rival Nvidia. On top of that, there are reports that Intel is in preliminary talks with Apple and TSMC for further investment and collaboration, which would be a game-changer. This wave of capital is being seen as a strong endorsement of Intel's foundry strategy and their push to get their 18A node manufacturing process online and competitive. Adding fuel to the fire, Micron recently gave an upgraded forecast for both the traditional server and PC markets, two areas where Intel still holds a dominant market share. This suggests Intel's core business could be strengthening right as they are making these big strategic pivots. The company has also been showing financial discipline, highlighted by the sale of a majority stake in its Altera business. However, it's not all clear skies. Some analysts still point to valuation concerns after such a rapid run-up, and Intel has a lot of ground to make up in the high-growth AI GPU sector. Now let's see how this incredible story is reflected in the charts, starting with the big picture on the one-day chart. Looking at this daily chart, the story of the past year is one of extreme highs and lows. We can see the stock was in a painful downtrend for much of late 2024 and early 2025, culminating in a 52-week low of just $17.66 back in April. Notice the massive volume spike on that capitulation candle on April 9th, which often marks a significant bottom as the last sellers are flushed out. Following that low, the stock entered a long period of consolidation, building a solid base mostly between $18 and $25. This basing period is crucial, as it builds the energy needed for a major trend reversal. And what a reversal it has been. Let's zoom in on the action since the beginning of this month to really appreciate the power of this breakout. Here you can see the move that has everyone talking. After testing the $24 level, the stock exploded higher around September 15th. The key event was the massive gap up on September 18th, where the stock jumped from around $25 all the way to open above $31. Look at the incredible volume on that day, and again on the surge yesterday, September 25th. This is institutional buying pressure and confirms the validity of the breakout. This is the market aggressively repricing the stock based on the new, positive fundamental outlook we just discussed. The stock charged right through previous resistance levels and set a new 52-week high yesterday at $34.25. That high is now the immediate resistance level to watch. On the support side, the top of that huge gap, around $30.16, is now a critical support zone. The previous resistance area around $25 to $26 should now be considered a major long-term floor for the stock. Now let's switch to a shorter time frame to analyze the health of this current trend. On the 1-hour chart, looking at the past few days, we see a textbook strong uptrend. Notice how any small dips or periods of consolidation, like the brief pullback on the 23rd, have been met with strong buying pressure, creating a pattern of higher highs and higher lows. The sharp acceleration yesterday is clearly visible here, showing sustained momentum throughout the trading day. This isn't a rally that is showing signs of exhaustion yet on this time frame. The buying has been consistent. Let's get even more granular and look at the 15-minute chart from yesterday's session. Here on the 15-minute chart from yesterday, we can see the stock gapped up significantly at the open and immediately saw a wave of buying. After an initial push, it spent the middle of the day consolidating those gains in a healthy range, mostly between $32.80 and $33.50. Then, In the final 2 hours of trading, another surge of volume came in, pushing the stock to a new high and allowing it to close at $33.99, right near the peak of the session. This type of closing price action is extremely bullish, as it shows that buyers were in control right into the bell and there was no significant profit taking. It suggests a strong potential for follow-through momentum. So, with all this information, what's the overall outlook? Let's go back to the daily chart to summarize. So, let's recap the scenarios. The bullish case is strong. The fundamental story has a powerful new narrative backed by major investments, and the technical picture shows a historic breakout on massive volume. Bulls will want to see the price consolidate above the $32 level and then make a decisive break above the new high of $34.25. The bearish case rests on the idea that this move is too far, too fast. The stock is now short-term overbought, and a pullback to digest the gains is not only possible but would be healthy for the trend. Bears would see a failure to break $34.25, followed by a high-volume drop below the $31.20 level as a sign of weakness. A break below the major gap support at $30 would be a significant red flag. So let's outline the key price levels to watch. Immediate resistance is the 52-week high at $34.25. Above that, $35 is the next psychological target. For support, we have the intraday low from yesterday around $31.21, followed by the major gap support around $30.16. Now for our unbiased predictions. We believe there is a high likelihood, about 70%, of some short-term consolidation or a minor, healthy pullback into the $31.50 to $33 range. This would allow the stock to build energy before its next move. There is a medium likelihood, maybe 25%, that the FOMO and positive new flow cause a continued parabolic push straight through $35, though this becomes less sustainable without a pause. Finally, there is a low likelihood, just 5%, of a major reversal that breaks below the $30 support in the near future, as this would require a significant negative catalyst to derail the current powerful momentum. The key things to watch for are volume on any pullback and any follow-up news on those potential investments. That's our analysis of Intel. It's a fascinating story and a powerful move that has put this stock back on every trader's radar. What are your thoughts on Intel? Let us know in the comments below. Don't forget to like this video and subscribe to Explain the Charts for more in-depth analysis. Thanks for watching, and we'll see you next time.